Hi, I'm Tim Sustak, SVP Investments and Treasury with Mid-Atlantic Corporate, and this is the Economic Update for September 2015. Today, we'll take a look at how our economy is doing via the past few significant data releases, as well as discuss the mindset of the Fed going into its September meeting. As the economy goes, the first revision to second quarter GDP was very favorable, showing the economy grew at a 3.7% pace in the second quarter, up substantially from the initial estimate of 2.3%. This is great news as it follows the trend we have seen in recent years, where the economy sees a nice rebound in the second quarter following a lackluster first quarter. The initial reading had put a damper on many estimates of growth for the remainder of 2015, but this latest revision serves to erase much of that doubt. On the heels of the GDP report came a glimpse of the third quarter in the form of the Personal Income and Consumer Spending report for July. That report unfortunately came and went without much fanfare, even though there were some positives. Personal income rose solidly at 0.4%, led by strong wage and salary gains. Spending was just okay, showing a 0.3% gain from the prior month, led by vehicle sales. The headline news here, though, was the inflation number in the form of the PCE index, which came in at 0.3% year over year and 1.2% excluding food and energy, basically flat from the prior month. The PCE was the focus of this report, as it is the Fed's preferred inflation measure, and there is certainly nothing here that would change any of the minds at the Fed from what they were thinking before the report. After a break, a look at just what those minds seem to be going into the September FOMC meeting.
With MyCU Services Workplace Essentials, this no longer has to be you. You can get all of your child's back-to-school supplies delivered right to your office through Workplace Essentials. And with free overnight shipping, fighting the crowds is a thing of the past. It's simple. Your child chooses what they want online, and it arrives at your credit union the next day. Workplace Essentials. No lines, no traffic, no hassle.
Welcome back. We received a good glimpse into what the Fed is thinking this past weekend, given all of the talk by Federal Reserve officials at the annual Central Bank Symposium in Jackson Hole, Wyoming. Last month, we mentioned that Atlanta Fed President Lockhart, who tends to represent the committee's consensus, indicated that it would take significant deterioration in the economic data for him to not want to move in September or shortly thereafter. Overall, the message from Jackson Hole seemed to be that neither China nor the recent market turmoil is enough of a concern at this point to change the Fed's plan to make a rate move in 2015. I'm not sure, however, that we are any closer to knowing which meeting in 2015 may be the one that sees liftoff. There is some data out there to suggest that the Fed historically has been reluctant to hike rates when there is market turmoil. I think the message that the Fed sent is that this recent round of turmoil certainly is not yet enough to sway the overall feeling that the US economy is fairly strong, is moving in the right direction, and is able to handle a 25 basis point increase in the funds rate as a step towards normalization. Although the markets and media tend to want to change the probability of what the Fed will do with every piece of economic data released and every blip in the market, the reality is that the Fed is taking a longer-term view on the economic data. And overall, that points to an economy that continues to recover and grow, albeit at a less than breakneck pace. The message from the Fed remains that they are data dependent when it comes to setting monetary policy, and we still have a couple of weeks for that data to be analyzed, including the all-important employment report this Friday, before we reach the next decision point on September 16th and 17th. It appears even the Fed doesn't know yet what it will do then. However, it seems that something pretty substantial to the downside would have to happen, or significant market turmoil would have to persist for us to not see the first rate move before the end of the year. That's the economic update for September. Let's take a look at this month's release dates for some of the more important economic statistics. We'll see you again next month for another look at the economy. And as always, thanks for watching Finection.